The world's most valuable company, US chipmaker Nvidia, just released their second quarter earnings, reporting nearly 47 billion US dollars in revenue, slightly beating analyst estimates. And yet their stock was down 3% in extended trading. Bob, what's going on here?
Well, look, here's the challenge with Nvidia now is we're hitting the law of big numbers, meaning as you get to income levels that they're hitting nearly $50 billion a quarter, it becomes impossible to have large percentage growth. And so many people are focused on percentage growth. And realistically, that's just not going to happen. And I think the biggest factor for this quarter for NVIDIA is the fact that even though they had extraordinarily strong growth, there was a slight miss in data center infrastructure income. And so I think people are really focusing on that because there's been a whole bunch of people waiting for the AI bubble to burst. And so they're looking for any possible sign that could happen. So unfortunately, it's a question of just completely unrealistic expectations. You can't continue blowing out earnings when you're at this level. And I think that's the market reality.
Nvidia reported no China sales of its H20 chip in Q2. That's a chip that was designed specifically for the China market to comply with US chip export rules. They also excluded H20 sales from their Q3 outlook and have reportedly asked partners like Foxconn to cease production on that chip. So is the H20 effectively dead?
No, I don't. Well, I mean, it may be that the H20 is dead because, quite honestly, there's also been a lot of discussion about the fact that NVIDIA already has a successor to the H20. So, but I think the notion of selling something to China, whether it's the H20 or the successor, has not completely gone away. It's clearly paused right now. The fact that NVIDIA had zero for China when China used to be a big part of their income, and yet they still did as well as they did, shows you just kind of how crazy to think that this AI bubble is over, right? If you had thrown in even a little bit of China income, they would have blown away the quarter, right? Or they certainly would have had a bigger blowout or a bigger set of numbers than they currently had. The potential upside of China on top of all the growth that they're still expecting without China tells you that, look, there's still plenty of opportunity here.
Nvidia made no China sales of the H20, but they did sell about $650 million of H20s to a customer outside of China. What kind of customers would be interested in this ostensibly China-only chip?
Well, there's plenty of people theoretically who could use it. Again, I mean, you could see, first of all, you could see other countries around the world. Everybody's trying to do their own sovereign AI, right? Sovereign AI has become a big thing where countries around the world want to build their own data centers. They don't want to rely necessarily on just US-based hyperscalers. So there are plenty of other countries around the world where that's probably being purchased. Not everybody has to have the latest chips. The biggest guys do, but smaller countries, countries just starting doing an AI build out, enterprises themselves, there's plenty of demand for not N-1 as they say chips, and that's what you've got with the H20.